All right, recording is started, and just for official purposes, once again, today is May 30th, and here's today's version of our demo. And our Director of Client Services, Henry, is going to start things off for us today.
Great. Thanks, Brian. Well, welcome everybody again. My name is Henry Howard. I help with all the client stuff. So if you guys in on the chat where you write sort of technical issues, I'm there to help you and can help with some other stuff. So this morning or this afternoon, I wanted to just go over sort of my process. I have a very methodical way that I look at the market and what's happening, and then go over a couple of things that I saw yesterday that caused me to get. I was writing the desk note on Wednesday, and I was like, I don't want to call it, but I'm pretty sure this thing's going down. So I'm gonna insight on what helped that decision, and then we're gonna look at a couple individual names and what drove those, and then I'll hand it back. We have what Brian didn't mention is a very fun game for the end of this demo. So you're gonna want to stick around for that. But in the meantime, let me go ahead and share what I have here. So I'll start with our dashboard here. So those of you who are new, we always like to just approach, here's our dashboard. If there's IBKR users, you only get these trading ideas. The thing I love about having the full version of Edge is the ability to create custom portfolios. This week I added a Bitcoin portfolio, and really a lot of what I love about this is the charting function. As soon as I log into the dashboard, I love looking at where I have a FANGs and I have a big tech portfolio. I like to see where different sectors are and what's happening. If I see all of this consumer discretionary is high short volumes, look at how all of these are moving up together. That gives me an inside look at what this broad market sentiment is. So normally, even though I showed you the sector, I'm going to start with market sentiment, and we generate, even though we check this every day, we have a general idea about where these what's happening in combination with with short volumes and broad market. We also have an idea of what's with the context in the calendar. And so, first of all, I'll look at where our short volumes are. I'll look at where they were on the short term, and then I'll remind myself, I'll start by at least a year just to look back, like relative to where the market has been. Where are we? We're right at 50% short, which is not ideal, but relative to 3 years ago, the market's been really up above 50%, and we've still been able to move higher in certain situations. It's really been predicated on rising and strong demand. So that's step one, is looking at broad market and short volume. The second I have is our two main portfolios, momentum and low volatility. And I did track of how many names are in momentum and how many names are in low volatility. We know that normally what we'll see is momentum. That momentum portfolio will run out of names at the end of bullish moves, and so that becomes a little bit of our signal. When I saw that moved from when momentum moved from, and I mentioned this in the note, when momentum moved 21 to 13 names, that's a significant number of names that are falling. So I realized, so that gives me an idea that there's not as much strength there. And then low volatility is starting to lose a couple of names. It was a little stronger yesterday. But I mentioned in the note, I went through these low volatility, so we can go here, look at these low vol names, and I'll sort. What I'll normally do is I'll sort by demand, or not demand. I'll sort. Let me go back here on our daily trading ideas. Normally, I'll go to low volatility, and I'll sort by probability the highest. So these are the ones that I'm looking at. The thing that's below 84%, I'm not really checking these names. This is these are enough things to devote my time and attention to. But as I said in my note, none of this, because where broad sentiment was, none of these gave me the warm fuzz about trying to get long in any of these names. So that's step two, is understanding what's in momentum and low volatility, and then actually go and I'll find, like I want to look at things like Nvidia and seeing, Nvidia's had such a run, and just making sure that that still makes sense in the backdrop, and that price still makes sense in the backdrop of sentiment and short volume. And so if there's anybody who's out there is a short seller, I look, anything that has a short volume that's doing this thing, I'm never looking to get short that. I'm looking to get short something that has this rising and this demand that's in the trough. So anyways, that's what I'll look at. I wanted to check out, I had mentioned Dell a week ago. There was still some risk in, we've had this long, but I mentioned it last weekend, which would have been, last week. And what we saw was we still had declining. So this was, let me get to about a week ago, Wednesday was right here. We saw sentiment still just hitting the roof, and then short volumes that are still declining. That's a nice downward trend, which still have some momentum and movement to go up there. The exit was seeing this short volume begin to rise significantly from 32 to 38, and now at 45%. I'm okay getting out of those when that starts to rise. The other metric I'll use is our volatility metric. So I want to look at another bigger name, Google. I mentioned yesterday that there's the short volumes at 55%. That's especially for Google, that's another sign to me that the market is hedge when this short volume moves from 33, 37%. We had some demand that helped, but when this here, that tells me that there's more, that people are protecting their positions. And that doesn't necessarily mean that it's going to fall apart. It just means that there is perceived in this market. So that's number two. And then what I to mention, the last thing I wrote in my note was that it's calendar risk, not as much data and event risk. We've had some of that with earnings, and we have some other data risk, but specifically with Meta, what I was looking at, even though solid I almost mentioned Meta, but with really solid demand here, even this flat, we have good low short volumes. In the context of the calendar, is knowing that that the models the models that are following these monies, that they're tied to allocation strategies. And so when Meta moves over here from 235, or if I another year, it's up 200% in 18 months. What that tells me is when we start to see these broad movement turns, these things that are really highly allocated, even though they have maybe low short volumes and steady demand, there is a shift. There is going to be a reallocation of those things. So those are some specific looking at. I'm looking at the calendar and what's happening in the rhythm of the market. I'm looking at high short volumes and where they are relative to history. And then with the Dell example, I'm just looking at something that has really, just looks like it still has room to run. Sentiment is, shooting through the roof, and short volume. Like, to me, those are kind of the easiest. You can avoid the other stuff. We're in good shape. So that is as much have right now. Unless anybody has any burning questions, I'll go ahead and back to Brian, and we can keep going here.
Sure. No, thank you, Henry. One question for you. In your note, I believe it was yesterday, you had mentioned being a premium seller. I'm wondering if you can maybe talk into that for a moment.
Ah, I can. That was my um the last, I like to put a final thought as a caveat. Sometimes it's a bit of a hedge when I'm writing notes. And by hedge, I mean I'm always careful um, rolling people into a market, um, you know, be confident, just because that's, I think, is important and sort of diligent. But my point is, if we just go back and look at SPY, um, say you go back to mid-March, and you sell uh, you sell premium on the SPY for 3 months. Well, you're getting still, somewhere in late March, you're still getting right back to our, if you sold premium, you're making money off of those premiums, because really the market, I always think about like a 50-50 market. 50% is up here and 50% is down here, and the middle is right here at about 515. And um, you know, the a lot of the some of what people need is liquidity. You're tending to do is just, oh, you can't see my screen, sorry. Um, my point is that a lot of the market is long short, and they're tracking those indexes, and so the reversion to, the mean reversion trade is really strong, and that's why we have daily volatility metrics in our data, is because that reversion trade is really strong. And so if we know that reversion over a longer period of time, you understand why premium sellers can make money, is because we tend to revert to the mean over a number of time frames, whether it's a day or a month or a year. So does that help with answering that question, Ryan?
Yes, it sure does, and I wonder if that's part of the reason why we're seeing such a disparity today in terms of performance. We're here at the month-end time frame, 2 days left. Here before the end of May. We're now in that T+1 calendar in terms of trades settling, and I'll go ahead and share my screen. Take a peek at what we're seeing in midday trading. And if you look at what is occurring right now, S&P down 32 basis points, but for the most part, everything's green. Here's what's taking it on the chin. And if you look at the setup going into today, tech was actually one of the better positioned sectors. So we would have to conclude that a lot of that damage is just month-end related trading, but just interesting as we get to these moments in the market. Part of what I wanted to cover today was, like Henry, want to kind of talk through my thought process a little bit, how I select some of the names that I select, especially when we're looking at, perhaps the daily trading ideas. And we'll kind of start there today, and I'll pull up what we have in momentum right now, and we'll take a look at AA and let you know why I was looking at that one this morning. By the way, Tim went into that and actually made 2.5% today, so that was a good winner for him. So in terms of what I'm looking at, ideally, I don't care solely about price, but to me, price is a consideration. Why is that? Well, if something is bucking the general market trend, I want to pay attention to that. So market was weaker yesterday. Alcoa was moving higher in the middle of weakness, and shorts were getting covered. I like that. And I like the fact that it's moving higher, but it's not 10 or 15% moves at a time. If you look at, we'll take a look at Dell for example. The last I looked today, Dell was coming under pressure. They report earnings after the bell today. Look at this upside. they've gone from the 150 level up to about 175 in the course of about a week and a half. That's just tremendous, tremendous upside coming into earnings. Meanwhile, look at their short volumes shooting higher. I would say there's risk of a little bit of pullback going into earnings. Sentiment is great, uh, but short volumes screaming higher, and you have to wonder whether some of the movement in Dell has already taken place ahead of earnings. I don't know. We'll find out after the bell today. But part of what I'm looking at there pre-market, and I'll go back to those daily trading ideas. I'm looking for those setups, and similar to Henry, I'm paying attention to the ones that have the greatest probability. Everything in momentum basically has good probability. Of course, NTNX was coming out with earnings today. I'm not going to touch that. That was down significantly. What I'll pay attention to, and I'll usually put my limit orders out maybe 6:45, 7 a.m., something like that. I'll take a look at what's happening pre-market. Yesterday, the market was very weak ahead of the opening bell. So I wanted to be towards the lower end of the entry low. And actually for me, and I gave the example this morning, yesterday I just decided I'm just going to take out the daily volatility. So if the market's going to be weak today, it likely will not extend too much more than its daily volatility. So that's what I did. I think I put out 3 or 4 names, and I was able to get positions in 2 of them. Sometimes you won't get positions. I tried to do that with Alcoa today. I was not successful. Tim went more in this range today, and he was successful. So every day is a little bit more, where do I want to be in the range itself? But I was just more comfortable being below the entry range today, just because of the general market conditions. I'll also look at what sector am I thinking of buying. Here's ADI for an example. Coming into today, tech had been very, very strong. ADI has about a $6 range between entry low and entry high. If tech is one of the strongest sectors, and it's generally been moving higher, I might not be able to get a position being there at the lower part of the range. I might have to go towards the middle of the range, something like that. Maybe I'm 227.50 or somewhere in there. Of course, today's not a great example because tech has been for sale, but generally speaking, what sectors are doing well? If they're screaming higher, you're just not going to pick up positions at that low part of the range. I did want to mention CELH, mention that in my note this morning. I made a mistake on that one. And, Tim has mentioned previously, hey, you have a mistake, you won't repeat that mistake. Well, similar for me. So this was when I bought CELH pre-market. This was the look I had the day that I bought it. It was good. Short volume, very, very low. Probably the only weakness here is that we had been in a 10. We'd been at a 10 for quite a while. The longer you're at a 10, the greater potential at some point, you're going to pull back a little bit. Well, we pulled back, an extreme amount. I forget at the end of the day, I think it was down 13 or 14%. Now, the mistake I made was not with the entry price. I was towards the low end of the range. I was comfortable with that, but I was walking the dogs, and I come back and I'm sitting on a 10% loss. So my mistake was not putting in a limit sell order at the same time as my limit buy order. So in other words, if I get executed on the buy, I needed to have protection, just in case I was away from my desk there for a moment. So that's part of what I do for daily trading. I'm going to look at those pre-market conditions. Once again, that's going to factor into where I'm going to be in that overall range. And as I mentioned today, I was at the low end of the range. I was comfortable with that just because of pre-market weakness, or what I thought would be pre-market weakness. I didn't get executed on the trade, but that's a chance that I took. I did want to speak into for a moment longer term positions, and Henry had talked about this with the broad market right now. And this will feed a little bit into kind of the path ahead. And Henry and I will both talk about this here in a minute. But I started to take a short position. I think it was right in here. I had mentioned it last Friday as a consideration in my note that sentiment was starting to slip, short volumes were moving higher, and what I will generally do is I'll establish kind of a base position, and then I'll add to it over time. The reason that I do that is because I don't know how far we're going to slip. Here's a couple great examples. We were at the red line. We moved down a little bit, we immediately moved higher. If I had a really large short out there, I'd be losing money, on that trade because sentiment didn't slip as much as perhaps I forecasted that it would. So I tried to get my positions established, but also to protect myself in case, sentiment doesn't move the way that I thought it would. So I established an initial position a few days ago, and I'm now just slowly adding to that position. I think sentiment will continue to move lower, but thinking is not a good strategy, or feel is not a good strategy. I think once again using the same term that we might see something similar to this, but I could definitely be wrong. So I want to make sure that I'm not too overextended on this short position that I have right now, and that I don't lose money in case it's one of these scenarios where we suddenly, bottom and sentiment starts moving higher again. And especially, you always want to consider that context. We are at a potential inflection point once again here with month-end activity. I think that's part of the reason why we're getting the movement in the market today that we are. I wouldn't be surprised if we get similar movement tomorrow, just with this overall month-end positioning. So once again, I do both. I do the daily trading, and then I do have longer term positions, based on where we are from a broad market sentiment perspective. I got more aggressive down here below the green line. It was one of my larger positions that I've had in a while. And like I said, I established a base here about 4 or 5 days ago, and I'm adding to that base on the short side. I'm doing that every day. I did it yesterday. I did it so far. I did it earlier in the morning. I'll add to it again before the closing bell today. That was part of what I wanted to cover. Let's see. Yeah, that's good for what I wanted to cover there. Henry, let's jump into that discussion. I can start it. What we're going to take a look at. Go ahead, Henry. I'm sorry.
2 questions. The first, and then we'll get to Steve. Why is there a narrow range of SPY and QQQ since the last 2 to 3 days? We've been talking about,
Yeah, in terms of overall pricing.
Yeah, I think it goes back to that we have had really low volatility for a time now. But that's, I think it's picking up a little bit. Like 2 weeks ago, I talked about the VIX, and that's starting to pick up. But I see that as, I don't know if you have any thoughts on that.
Yeah, two thoughts. I'll go ahead and share my screen again. And this might be a portfolio that you want to pick up if you don't have it. I have a lot of portfolios. Some of them are for individual companies that I cover from an investor relations standpoint. But triple Qs, and actually I got this idea from John Cook. Thank you, John. Appreciate that. But this is a manual entry. But as you can see, they're actually not that bad right now. Sentiment rolling over just a little bit, 5.5. But shorts have really been covered here over the last week. And we were speculating here during the last few days, especially with the SPY, that we think we had some real hedging going on ahead of the implementation of this T+1 window. So that got implemented on Tuesday. Look at the extreme short covering coming into T+1. It's just starting to normalize now. I think we had some market participants that wanted to be safe and not have fail to delivers. We just had some extreme movement there for a period of time. I think that's part of the reason that we're getting that kind of similar trading between the Qs and the SPY. We just get the big players kind of all doing the same thing at the same time.
Right. It clearly looks like it's rebalancing, right? I mean,
Yeah.
I track the weighted and the unweighted demand for the S&P, and the unweighted, like the other 490 let us out of that move where you were getting long.
Yeah.
If you look at it, RSP has not made a new high and rolled over. It tracks very well with the demand, whereas SPY is or the weighted index definitely is being held up by NVIDIA and maybe Apple, right? You can see it.
Yeah.
I think yesterday, like to your point, I think they rebalanced out of those because they took profits there, and now they're flipping it. You can see like they're literally doing the same thing today. And I forgot about T+1, but that makes sense because tomorrow's the 31st, so that would be settlement, right? And so that, I mean, it's not 100% certain, but it very much feels like that. And I think to Henry's point too, like, you know, from an option selling perspective, you can see like how they move the market, but they don't move it enough, or they don't move it much more than where they need it to be.
Let's see. John, I think you're muted right now.
Hey, come back.
Yep, you're back.
Yeah, I was just gonna say, I think we're getting a little support because of that, and then OpEx tomorrow too. Yep.
Steve, you had a question. Fire away.
Yeah, going back into your daily trades.
Yep.
How are you protecting yourself in this volatile market? I know I dropped 8% on 2 openings where I would, I'm doing my stop limit, but when it opens in the morning at 4% down, you just lost it because it closes out automatically. And I've had 2 of those just this week where I've lost 8% doing that. What do you do how do you protect yourself in a situation like that?
That is a difficulty of holding positions overnight. It certainly is. I personally try not, as much as possible, try not to hold positions overnight, but there is definitely a risk on that, Steve. And that's a good question. I'll circle back to you on that one because I know Tim has mentioned that before in terms of hedging positions when you are holding something overnight. So let me ask Tim in regards to what he does with his positions. Personally, I try to be as flat as possible each day, but you're absolutely right. There is some risk in that.
Right. If you're going for, the 5 days or even 2 days, you're going to be vulnerable to that. And when we have a movement up, you generally are not having a problem with that because you've got the momentum going with you. But when we're in the choppy areas that we're in right now, it really can whap you really hard, really quick.
Yeah, no, you're absolutely right.
Hey, Brian, to that effect, and I think like this is something I've noticed over time just because I've read all your everyone's emails. I think like to help with that would be to like quantify like what are the 5-day returns. If we can ask like Nate to run that. If you look at like, if you look past that whole data set, right, do the similar thing that you're doing for the individual stocks for the SPX. So like, when over history, we've seen, when broad sentiment does this and short volumes been this, 5-day returns are X, right? And I think like because you know that broad sentiment's turning down, you should be a little bit more like, careful in terms of like hedging and things like that. But I think that would be helpful too, just to know like what those returns are, because similar to what you were saying, like with your short position, yeah, you might get a 1 or 2 or 3 day flush, but this might not be the one that's big. Whereas, you can continually update that. I think that would be like really helpful. And something, I'm happy to help out with that too.
Yep.
And typically what I do is, if the particular stock that we're going to trade has good options liquidity, then rather than buy the stock, I'll just do an option spread. And that way, as I'm waiting for it to go with me, if it goes against me, I can close the short side and then let it run. And I can manage the risk the same way, and it kind of gives me a hedge, but it gives me more time to play.
Yep. No, that's a great point. Thank you for that. Thank you for that addition. Any other questions circled around that topic itself? If not, Henry and I were going to show you a couple of earnings related plays. Tim Henry and I started looking at a couple of things yesterday, and we thought maybe we would have a kind of a contest going.
Is Path one of them? Is Path one of them?
I didn't hear you. I'm sorry.
Is Path one of them? Because that was a great setup.
Oh,
Yes.
I don't know if I had Path on it or not.
Path
Path
and MDB today has the same setup.
It is in ours. It's in what we're talking about. Yeah.
Let's see that.
So let's here's the contest if you guys are game. So here's the names. Am I sharing my screen? I'm sorry. Let me share my screen and then go to that. And all right, so here's the contest if you're interested. These are the names reporting after the bell today. And just looking, I'll give you an example. So just go to Edge and take a peek at these names and then see what you think they might do going into earnings. So you see Costco with neutral sentiment, short volumes, right there with their norms. What do you guess Costco is going to do? Is it lower? Is it higher? If you say lower, and then just list the reasons why. If you want to go through that exercise, Henry, Tim, and I are going to be going through it. We thought it'd just be kind of fun here, and we might give you some other names with future market desk notes. But if you're interested, just take a peek at some of those. And you guys had mentioned MDB. Maybe let's go take a look at that one real quick. And we'll show you a couple of examples. Brian, yeah. Go ahead, Henry.
Real quick, can you copy and paste that link into the chat?
Yeah. Great.
I had a bunch of spaces, but then that way everybody can copy it. And it's funny. Tim kind of charged us. Tim had shared. He said, "Let's begin looking at earnings because it's data. We're a little cautious when we haven't, as Edge ran the data on stuff. We are a little more cautious. But I think we have some confidence in our user group to beta test an earnings, earnings reports and having people be a little more focused, and because part of what we know is a lot of hedge funds, most of their money is made around earnings, and so we're seeing a lot of the similar data. So I think that's leveraging our tools to better trade around earnings is part of the goal, and so we're sort of beta testing it out there to everybody. Is that fair to say, Brian?
Yeah, that's perfect. And I'll share a couple of examples from yesterday. We went through this exercise as a team, and just pull up what we were looking at. Well, here's MDB, by the way. My guess for tomorrow, no big surprise here, but you can see sentiment moving lower, short volumes screaming higher. I'm guessing lower. We'll see if I'm right tomorrow or not. But we look at one from yesterday, AEO. We can see that sentiment was moving lower, short volumes were moving higher. I guessed lower on that one. And what were they down 20% or something? No, 8%. I was thinking of something else. But that was AEO. Here's another one from yesterday, just to give you an idea of the exercise we're doing. If I no, that was the wrong one. Sorry. Let's look at one other one. We'll look at Salesforce. This is an interesting one because it ties into a little bit of market structure. And I'm sorry I'm bringing this up at the end of the discussion, but it's sometimes kind of a good discussion to have. So Salesforce sentiment had been moving lower. Short volumes had been moving lower. A little bit of an oddity, right? And notice the third element here, price also moving lower. So when you combine all three of those, and this is the part of market structure that can sometimes be a little bit confusing. Remember, with short volumes, it's a reference to borrowed shares. Now, if short volume is collapsing at the same time that price is, it's actually communicating that buyers and sellers are meeting each other in the marketplace. In this case, the sellers are meeting the buyers. There's not as much of a need to actually borrow shares. Normally, as we talk about, low short volumes is a good thing. In this context, it was actually not a good thing. And if you look at CRM today, of course, they were down significantly earlier, and they were the one that I was thinking that was down 20%. But once again, I know that's a little bit of a confusing topic, but we can talk more about that at a later time if you'd like. But sometimes that combination of lower short volume when you're seeing lower prices, it can just mean that there's a lot of sellers out there and there's not a normal need to borrow shares. And sometimes that can actually be kind of a bad thing.
So Brian, can I ask you a question on that?
Absolutely.
So when I looked at that, I said, okay, I played to the short side for the reasons, but then as I looked at it, I said, okay, with short volume so low, once it finds a bottom, there's a good chance you can get a bounce because of short volume being so low. Do you agree with that theory?
Yeah, I totally agree with that. When short volumes are low, there's less supply in the marketplace. Yes, it does require demand, once again, picking back up. Right now we don't have that demand, but once demand does circle around, yes, they're ready for a bounce. It's just a case of how long it takes, for that demand to once again pick back up. You have to remember with extreme volatility with earnings like Salesforce today, when they're down 21%, they're going to be, skewing the models. They're going to be introducing tracking errors, which is the bane of passive investors. And as they introduce those tracking errors, they're going to be kicked out of passive investment baskets. And a lot of times we'll see that for, sometimes it can be 2, 3, 4 weeks at a time until normalcy starts to go back into that name again. So every name's a little bit different, but if you introduce volatility, sometimes you're in the penalty box for a period of time.
Hey, Brian. So to that point too, I think something else that I've come to learn is that when you see demand go up and short volume goes up, well, while that retards it a bit in the near term, it's actually a bullish sign, or in the longer term, right? Because that's basically the market signaling that it's filling demand, right? And so as long as demand is staying there, you're going to see probably a drift higher. So what you just showed was interesting. So that's basically people, longs, whoever they are, passive, etc., are liquidating their longs and there are other willing buyers out there right now, is what you're saying. Mm-hmm. Okay, that's interesting.
Yeah.
And so that's when price and supply are both moving down.
Yeah, price is moving down, supply is moving down. Natural buyers and sellers are meeting in the marketplace. There's not as much of a need to borrow shares to facilitate demand because everything's under heavy pressure.
Is that when you get controlled sell-offs too?
What do you mean by controlled sell-offs?
Well, I mean, kind of, yeah, when people are searching for liquidity and there isn't liquidity, you tend to see those big red bars, right? Whereas, you know, if demand and supply, if people are looking to sell, but maybe there's a little bit less demand, but there is supply, but it's not like people are trying to get out, right? Like maybe someone's working a VWAP, right, really well, but that constant bids over the market.
Yeah, you're obviously, there's obviously buyers out there, or you wouldn't see that type of activity. Yeah, that's a good way of explaining it. Controlled sell-off. Yep.
Well,
we have
JC, to your,
go ahead. Sorry.
So sorry, you know, a lot of it from a short selling perspective, a lot of wait for a flattening of short volume for a day or two, because all of that coverage on borrowed shares are actually going to be, like you said, be a bullish sign. And similarly to Brian, we've talked about this in the broad market, is if there's you know, most of the time declining short volumes are a great thing. When those short volumes don't exist, there's not exit liquidity on the downside. So that is when you'll see those bars. You know, there aren't any, you know, there's nothing there. There's nothing to get covered. So you just have to go find where there is, you know, where there is liquidity.
Mm-hmm.
It's a good point.
So thanks again. Great to see everyone, and we'll do it again next week. Hope you have a great day.